traders, what's going on? How's the profits running at? Welcome to the video. If you are new to the stock market and if you wanted to invest in the stocks, but if you don't know when to buy, when to sell, and what strategy you need to follow for your investing, don't worry. By the end of this video, you will take away all the key points to begin your successful investment journey. Traders, I have seen that many of you will start to invest at highest price point. That means when stock starts to trade at all-time high, you will expect the stock will move now higher, right? But that's not the right. In this video, I have explained a simple but powerful investment strategy with the combination of EMAs and super trend indicator. Watch the video until the end and focus more. I have explained many technical terms and new concepts. Traders, before going for deploying the strategy, let's understand the two indicators that we are using for our investment strategy. If you are completely new to the stock market and you don't know from where to apply the indicators and how to see the charts, all you wanted to do is go to the browser and type tradingview.com/chart and you will be landing onto this page. This site is free to use for everyone with basic features, and generally TradingView will give a timeout for every 15 minutes. So create an account and use so you won't get any timeouts. If you are a newbie, let me explain the candlesticks first. We have two types of candle. One is a bullish candle and another one is a bearish candle. Bullish candle is nothing but the candlesticks that you are looking in green. Bearish candle is nothing but the candlesticks that you are looking in red color. For every bullish candle, price will opens at a lowest point and close at an highest point. And for every bearish candle, price will opens at an highest point and close at a lowest point. And also, as the stock moves higher, we call that as a bullish trend, and as the stock moves lower, that is we call as a bearish trend. So now let's see our first indicator. To apply this indicator, you want to go for this section and you need to type EMA. So from here, now you need to select a 20, 50, 100, 200 EMA. And after selecting, this is how it will look on your chart. This indicator is called as an EMA indicator, which stands for an Exponential Moving Average indicator. And the lines that you are seeing is called as a moving averages. In simple, if I want to explain you how does a moving average work is like, it will take the closing price of all the candles with respect to the given range and it starts to extend its line. Suppose, for example, let's take a 20 EMA. The red line that you are seeing is a 20 EMA. How does the 20 EMA work like is, in order to calculate a moving average for this point, it will take the prior 20 candlesticks closing price and then it will divide by the 20 and then it results you in this moving average point. And so like for this point of a moving average, the 50 EMA will calculate the prior 50 candlesticks closing price and then it will result you at this point. And like for 100 EMA and for 200 EMA. You really don't want to worry about this formulation. Statistically, everything will be done. And right now, you are seeing a 4 different EMAs, 20 EMA, 50 EMA, 100 EMA and 200 EMA. What does this means is, different kinds of traders will be used these kinds of moving averages to gauge the market sentiment. A 20 EMA will reflect a short-term change in the trend. A 50 EMA and 100 EMA will reflect an intermediate or medium level trend identification. A 200 moving average will give a long-term trend identification or a trend reversal. Now let's see our second indicator. To apply this indicator, you need to go for a indicator section and you need to type super trend indicator and then you need to select this indicator. And after selecting this indicator, this is how it will looks in the chart with a bullish trend indication and a bearish trend indication. The green area that what you are looking is a bullish trend, the red area that what you are looking is a bearish trend, and that is where the price is what falling. And as the name says, a super trend, this indicator is also used to gauge the trend in the market. Now both the indicators is in our chart and let's use these two indicators to deploy our strategy. We are on a Bharati Airtel stock chart. Let's see how our buying strategy triggers. The first point you need to check for buying any stocks is, you need to find a base like this. In technical terms, it is called as a consolidation zone. What happens in this zone is stock spends a good amount of time here to give another leg of rally. In simple, if you want to find a basis, you need to find a group of candlestick formation like this. Then the second point you need to check is the both EMAs and super trend indicators is what aligned with the candlesticks. That means for our buying strategy, price should close above both the super trend indicator and also the EMAs. See here, this circle is what that means. The price is what closed above the super trend indicator and the EMAs. This green candle is closed above both the indicators, and this candlestick is also closed above both the indicators, and same like this candlestick is also closed above both the indicators. And this kind of close above both the indicators indicates that there is a strength in the stock for an uptrend rally. And the third point you need to check when buying is we want a strong green candle to be closed above this 20 EMA, that means this red line. And see, all this circled candlestick is what closing above the 20 EMA, and this candlestick formation is also very big and it is closing very strong. Let me repeat the criteria again. The first point is you need to have a base like this, a group of candlestick formation at one point. The second point is you need to have a close above both the indicators. The third point is you need to have a strong close of the candlesticks above the 20 EMA. And these 3 points is enough for our buying strategy to get triggered. And let's see after the buying triggers how does the stock move. Here where we have a good base and a candlestick close above the EMAs and a green strong close above the 20 EMA. See, after the buying triggers, this is how the stock has rallied upside. And let's see where and all our buying is what get triggers. Here also green face is there, but the first point itself is not got triggered because a good candlestick formation is not there. And here also our entry not got triggers because a base formation is not there. And if we see this point, we have a very good base formation over here. That means a repetition of the candles in the same zone, right? So here our first criteria matches. And if we see the second criteria, the candlestick is what closed above the both the indicators, and here where our second criteria is also matches. And if we see our third criteria, the candlestick should be strongly closed above the 20 EMA. So now our all three criteria matches and our long position will be what get triggers at this point. So now see how does the stock give an uptrend rally. And also if we see our strategy further, here where our strategy didn't get triggers because there is no proper base. And if we see here, a good base formation is what there here. If we see our criteria, our first point is what got triggers with a good base. If we see our second criteria is also what get triggered. The candlestick is what closed above the both the indicators. And if we see the third criteria, this candlestick is what closing strongly above the 20 EMA, and this is the result after the stock gets triggers for our buy entry. A very good up move was happened. And traders, this is how based on these criteria we will buy the stocks. Okay, so now we understood where to buy, but after buying now comes the point when needs to be sell. You can exit the stock or you can sell the stock in two scenarios. The first scenario is after your entry got triggers, you can exit after the stock gives you a 10% rate of return. And the second scenario when you can sell a stock is when the super trend indicator starts to become a red. That means at this point the price starts to fall and the super trend indicator is also started to show the red zone, right? And this is where you can exit the stock at this point. Suppose if we calculate how much a rate of return that we get after our buying triggers to a selling point is, suppose if we buy at this point and if we sell at this candlestick, we get an almost 25% rate of return. And if we check from this point to this selling point, it is also given a 25% rate of return. And if you check from another entry of buying point to the selling point, you get an almost of 15% rate of return. This is how our strategy will be triggered for both buying and for a selling. Traders, bank FD will give you a 6 to 7% rate of return in 1 year. But see the stock market, it will give you a 15 to 20% of return in less than a month or in a multiples of month. Okay, now we will go and deploy the same strategy to some other stock and let's see how the results are shown. Let's deploy our strategy to the Adani Enterprises stock. If we see our first criteria, that is what get triggers at this point. That means we have a very good formation of a base at this point. And if we see our second criteria, the candlestick is what closed above both the indicators, that is EMA and also a super trend indicator. If we see our third criteria, the stock should close above the 20 EMA very strongly, and that is also what get triggers. So our long opportunity will be what get triggers at this point. So suppose if we enter at this point, our selling point will be at this point because this is the red candlesticks where the super trend indicator started to close in the red. If you see the rate of return, you would have made a 60% rate of return. That means if you had invested 1 lakh rupees, it would have given a profit of 60,000 rupees. And let's see another buying opportunity. This is also an area where a group of candlestick formation is also happened and we got a very good base. So our first criteria is what got triggers, and if we see for a second criteria, a candlestick is what closed above both the indicators. Here where our second criteria is also triggers. And if we see our third criteria, the candlestick should what close above the 20 EMA very strongly. So finally our buying point is what trigger at this point, 173 rupees of a price. If we see the rate of return from our buying point to the selling point, we made an almost 740% rate of return. That means if you would have invested a 1 lakh rupees, it would have given a profit of 7,40,000 rupees. And if we see our another buying opportunity after our exit from this point is, we don't have any buying opportunities at this point because we don't have a proper base. That means our first criteria itself is what not get triggered. Here also price moved higher, but our criteria is what not got triggered. But if we see at this point, all our three criteria is matched at this candlesticks. Suppose if we enter at this point and our selling will be what get triggers at this red candlestick close. Here we made an almost 47% of return. So traders, right now we are seeing all our deployed strategy in daily time frame. If we see the weekly time frame for our analysis is, our buying will be what get triggers at this point, and if we sell at this candlestick close, we made an almost of 1,000% rate of return. That means 1 lakh would have made a 10 lakhs of profit. Traders, this is the beauty of the stock market. So traders, let's see, if you invest blindly without a proper investment, what will happen? Suppose if you bought at this point, that means when stock starts to trade at an highest point, if you invest at this point without a proper analysis, see what will happen. Your buying point is this and the stock starts to fall. This is where you will be start sitting in loss, right? And also see another point, if you buy at this highest point and after you are buying, if the stock starts to fall, this is where again you are sitting at loss, right? And here also see Bajaj Finance chart. If you invest at an highest point and after your investment, if the stock starts to fall, this is what all your loss. So instead of blindly investing on any stock, use the right strategy to get profitable from any stocks. Now traders, it's my job is done. If you want to become a successful investor and you also want to get a same kind of returns in your portfolio, all you wanted to do is go and backtest the strategies on your investment stocks. I hope this video has given enough information for you. For such an useful and informative video, please post a comment in the comment section. So what kind of videos you are expecting further from our channel. Traders, the aim of our channel is to educate you all. We are not giving any investment advice or to buy or sell anything. Consult your financial advisor and take the action. That's it for the video. Thank you for watching. Show your trading enthusiasm by doing like, share, subscribe and comment. Thanks for watching, traders.